Good morning, New York, and Kalispera, Ελλάδα. I'm Eftihia, pylarinou-piper. I'm a member of the executive board of the Hellenic-American Chamber of Commerce and the chair for the organizing committee of this event. For the next 3 hours, I'll be walking you through a very informative event, which has valuable information for everyone in the audience. We have incredible speakers who are top experts in their fields. Their CVs and contact information will be found at the site of the Chamber of Commerce and will remain there for your reference. Our expert auditors and lawyers will share with us valuable information pertaining to the new Greek tax laws about the incentives given to transfer your tax residence in Greece. We will have a former IRS tax examiner and US tax preparer who will talk about the tax reporting obligations for US citizens who live in the United States, or they live in Greece, or own assets in Greece. We will talk about the Greek real estate market and opportunities for investment, as well as the tax implications. And we will learn about a newly voted law of transferring assets to family tax-free, γονικές παροχές, as we say in Greek. And we will get advice on some administrative issues, such obtaining the social security number in Greece, the Athina, as we call it, how to amend the tax status, and check if we are eligible for the new special regimes. This event has been organized by the Hellenic-American Chamber of Commerce and the International Chamber of Commerce, Hellas, and is under the auspices of the Greek Embassy in Washington, the Greek Consulate in New York, and the Ministry of Finance in Greece. I want to thank our sponsors, KPMG, Atlantic Bank, MacArthur Properties, Red Apple Group, Constantine DB, Mr. Clay Maitland, and IMAR. Please stay tuned till the end of the program. Don't leave, and I'm sure you will find answers to a lot of your questions. And without any further delay, I would like to call upon the presidents of the two chambers of commerce, Mr. Athas Ioannou, president of the Hellenic-American Chamber of Commerce, and Mr. Petros Doukas, president of ICC Hellas and mayor of Sparta, to give us their opening remarks. Mr. Athas Ioannou.
Hello, good morning, everyone. My name is Athas Ioannou. I'm the president of the Hellenic-American Chamber of Commerce, and I'd like to thank you for joining us today for this very important event. As Ms. Pylarinou-piper said, this is an event with a lot of valuable information for everyone in our community, and we take a lot of pride in providing this type of event that's a real material benefit we believe for our community. I'd like to welcome the Finance Minister Staikouras, Ambassador Papadopoulou, and Secretary General Kalyva from the Ministry of Finance. We really appreciate your participation here, and for the rest of the panels as well, all the participants. I'd also like to thank the committee, and specifically Ms. Pilarinou-piper and Alexandra for really doing a tremendous amount of work here, and of course our sponsors and viewers. And I would like to introduce Mr. Petros Doukas, who is the president of ICC and who is also co-host of the event today, and he's also the mayor of Sparta as well. And I just would like to thank them for doing so much work to put this event together with us, and it's such a pleasure to work with them again in this way. And so, please, Mr. Doukas, welcome.
Thank you, Athar, and congratulations for the great work you have been doing with the American Hellenic Chamber of Commerce.
Thank you.
It's indeed a pleasure to work with you on this event as well, and to welcome you and to be with you here today, and with all our friends from ICC, the International Chamber of Commerce Greece, spanning throughout the Greek Epikratia. And just to make a quick note, I was yesterday unanimously re-elected chairman of the board of ICC Greece, and thank you to all of those who gave me that support. I'm talking to you and connecting with you from the great city of Sparta. We're celebrating, as you know, this year exactly 2,500 years from the famous Battle of Thermopylae, and I would like to extend an invitation to all of you to come and visit us soon. Many regards and respects, Atha, to yourself, to Ambassador, Alexandra Papadopoulos, to Eftihia Pilarinou, Senior Vice President of the Red Apple Group. She's been doing a tremendous group and tremendous work keeping our teams together and promoting the interests of Greece and of the Hellenic-American community. Bravo, Eftihia. To Finance Minister Christos Staikouras. He's a very, very diligent worker in a very, very hard time. And Christos, thank you for being here. And Secretary General Athina, Kalyva, and all the exceptionally and exceedingly great speakers that our teams have amassed for tonight and who are participating in this forum. You know that a country's tax regime and tax credibility is either an advantage or a disadvantage. If you do your job well, you can attract business that would otherwise be attracted elsewhere. And if you do the wrong thing, then businesses will fly away and won't be attracted to our country and won't help create jobs, because that's the whole idea, to allow people to live in a system that makes it for everybody more prosperous. Yes, there are many advantages and factors of competitiveness for each country: the size of the market, the health of the banking system, the availability of financial and capital markets, the availability of quality labor force and the wage levels, the credibility of the justice system, and of course the tax system that can either be, as I said, attractive and an advantage or a disadvantage. Today we'll be discussing the systems for trying to attract non-residents in Greece. And we have amassed, as we said before, great speakers. So I'm eagerly looking forward to listening to how we can really see the system, understand the system, and if possibly make it better, because Christos Staikouras is a minister and Ms. Kalyva, very close partner with him, that are listening. And then if there's something we can tell them to make things faster and better, they will do it. So many thanks. Keep up the good work, and eagerly awaiting for our speakers.
Thank you both, Mr. Ioannou and Mr. Doukas, for your personal contribution in organizing this forum. And we should mention that we have plans for many more joint events in the future. And now it is an honor for us to have a message from Mrs. Alexandra Papadopoulou, the Greek ambassador to the United States. Ambassador Papadopoulou has a law degree from the University of Athens and a master's in international relations from UPenn. She has a very long outstanding career in diplomacy, having served in many ambassadorial positions all over the world. She speaks French and English. The video, please.
Ladies and gentlemen, it is with great pleasure that I address this forum today, titled Greek Tax Incentives, a Guide to Tax Laws Affecting Non-Residents. First, because it is a collaboration of two highly regarded institutions, which are the Hellenic-American Chamber of Commerce in New York and the Greek chapter of the International Chamber of Commerce. Second, because this forum serves as a wonderful opportunity to talk about Greece's strong economic recovery from the COVID-19 pandemic crisis, as well as showcase recent developments on Greek tax issues in our effort of continuously introducing multiple structural reforms which positively affect the business landscape in Greece. Although Greece experienced a steep recession of 9% during the pandemic crisis in 2020, due to the significant decline in economic activity and especially in tourism revenues, we're indeed experiencing a strong recovery in 2021, estimated by the European Commission in its autumn 2021 economic forecast issued on November 11 at 7.1% for 2021. And 5.2% for 2022, that is growth rates comparatively among the highest in developed countries. Notably, both before and during the pandemic, the Greek economy enjoyed a high degree of confidence in the capital markets, and its resilience was widely acknowledged, as reflected in the Greek record low interest rates on bonds, sustaining a positive investment environment in Greece that led to credit rating upgrades both during 2020 and 2021. Most importantly, funds from the current National Recovery and Resilience Plan and the new EU Cohesion Policy 2021-2027 significantly enhance the prospects of strong economic growth in Greece by utilizing the projected total of approximately 59 billion euros for reforms and investments, offering investors a host of opportunities in a number of different sectors, also in the context of the digital transformation and green transition that are key to the government's agenda and currently underway in Greece. On the main subject of today's forum, regarding tax incentives for non-residents, I would like to draw your attention to 4 recently introduced Greek tax laws aimed at attracting new tax residents and investment in Greece as follows. First, in 2019, Law 4646 introduced the concept of non-dom, short for non-domiciled persons, to attract foreign tax residents and investors. By moving their tax residence to Greece and making a substantial investment, these persons benefit from an alternative taxation regime for their income of foreign origin for a period of up to 15 years. Then, in 2020, Law 4714 subsequently extended the alternative income taxation regime to foreign retirees pensioners who, upon transferring their tax residence to Greece, now also benefit from a low tax rate of 7% on their total foreign source income, and Law 4758, which established tax incentives to attract foreign salaried and self-employed persons moving their tax residence and working in Greece. For these categories, a 50% exemption from income tax and the special solidarity contribution was introduced for a period up to 7 years. This is also a measure aimed at reinforcing the brain gain, which is attracting back those Greeks with a high level of knowledge, professional skills and abilities who left the country during the financial crisis of the past. And completing the quartet of related tax interventions, most recently in 2021, Law 4778 introduced the concept of family offices in Greece and set clear and transparent rules based on international best tax practices for the establishment and operation, including tax matters, of special purpose companies managing family assets. Admittedly, the first results from the implementation of these tax incentives have been very encouraging, despite the COVID-19 pandemic circumstances during the last 2 years. In particular, according to official data, these incentives have attracted so far 75 investors from 21 countries, 214 pensioners, and 1,000 salaried employees, and have added approximately 10 million euros to Greece's tax revenues. Ladies and gentlemen, Greece has proven to be a pillar of stability in a highly volatile region as is Southeastern Europe, Eastern Mediterranean region, a functioning democracy with full respect for rule of law and the high standards of an EU member state, and as such, a reliable partner to the US, sharing common values and strategic goals. As 2021 marked the bicentennial of Greece, the 200th anniversary from the creation of the modern Greek state, Greece is now again transforming itself beyond economic recovery by combining economic efficiency with innovation and digital transition, protection of the environment, social cohesion, and justice. I congratulate you for this wonderful initiative and wish every success to your future endeavors. Thank you.
We'd like to thank the ambassador for a most informative message on today's subject, which is Greek tax incentives, a guide to tax laws affecting non-residents. The ambassador did touch upon the subject, but there's no better person to address the subject other than the Minister of Finance, Mr. Staikouras, who's the one that actually introduced him. Mr. Staikouras is an economist and a politician. He has an MBA from Imperial College in London and a PhD in banking and finance from City University. He has been in the political arena since 2007, when he was first elected a member of the parliament. He's the Minister of Finance since 2019. The Minister of Finance took time from his busy schedule to send us his message and insightful information about the new laws that are the subject of today's conversation. Could we play the video, please?
First of all, let me congratulate the Hellenic-American Chamber of Commerce and the International Chamber of Commerce, Hellas, for organizing today's event. Also, I would like to express my appreciation for their constant contribution in promoting not only exports and investments in Greece, but also our country's image abroad. In this regard, I would also like to thank the organizers for giving me the opportunity not only to address so many distinguished members of the Greek diaspora and talk to them about the recently introduced Greek tax incentives that may influence non-tax residents' decision-making. Ladies and gentlemen, since December 2019, the Ministry of Finance, under the coordination of the General Secretary of Tax Policy and Public Property, Ms. Athina Kalyva, has gradually formed a complete set of tax incentives for attracting new tax residents and investments in Greece. This new set of tax incentives consists of a quartet of measures which have already attracted great interest from investors, foreign pensioners, employees, entrepreneurs. The first tax incentives introduce Article 5A in the ITC, providing alternative taxation of individuals, investors, who transfer their tax residence to Greece for 15 tax years and is linked with the condition of investing in Greece a minimum of 0.5 million euros to be completed within 3 years. The alternative taxation consists in the payment of an annual lump sum flat tax for any foreign sourced income that covers the tax liability for this source of income. The second tax incentive introduced Article 5B in the ITC, providing the taxation of all foreign sourced income of foreign pensioners who transfer their tax residence to Greece with a 7% flat tax rate for 15 tax years. The third tax incentive introduced Article 5C in the ITC that exempts 50% of the income tax and special solidarity contribution imposed on the income derived in Greece from individuals who transfer their tax residence to Greece under the condition of being employed in new job positions or starting an activity as self-employed for 7 tax years. And finally, the fourth tax incentive, adopted on February, introduced Article 51G in the ITC that provides clear and transparent rules for the establishment and operation of family offices in order to manage cash flows and family property of individuals with tax residence in Greece. This relative joint ministerial decision for the services to be provided by the family offices will soon be published. Despite the fact that the aforementioned set of measures of incentives was introduced under extremely difficult conditions due to the COVID-19 pandemic consequences, data collected by the General Secretariat of Tax Policy and Public Property indicate that the new tax incentives can already be considered as effective and successful. Briefly, let me mention that during a 2-year period of implementation, the incentives for attracting new tax residents and investments in Greece generated in total revenue of approximately 9.4 million euros for the state budget through the final approval of applications submitted by 75 investors and 23 relatives of theirs. Furthermore, significant revenue is also expected to be generated and collected because of the large number of applications submitted by foreign pensioners as well as by employees and entrepreneurs. The tax due for these individuals will be determined with the submission of their annual tax returns in 2022. More specifically, 157 applications from 21 countries, including the US, have been accepted concerning the alternative taxation for foreign pensioners. Additionally, more than 1,000 persons have applied to opt for the special tax treatment of employees and self-employed, which was entered into force this year. Due to increased interest, deadlines for the examination, submission of the necessary documentation, and issuance of the tax administration decision concerning the tax incentive for employees and entrepreneurs were extended until end November. Besides, submission of applications for the first 3 tax incentive schemes was extended up to the 30th of September 2021 because of the increased interest and due to the difficulties caused by the COVID-19 pandemic. Ladies and gentlemen, all of the above prove that taxation is an extremely useful tool to achieve goals concerning economic growth and investment, besides securing public revenue. Thus, tax systems have to keep pace with the rapid economic and social changes. The Greek government and the Ministry of Finance are fully aware of this need and are aligned with it. The tax incentives for attracting new tax residents and investment reaffirm this. I invite those of you who can take advantage of these incentives to seize the opportunity to the benefit of both you and our country. I know that Greece is deep in your heart, and I'm sure that you already are aware of the fact that recovery is gaining traction in Greece. Every recent international and domestic forecast suggests that our national economy is going not only to regain, but also to surpass its pre-pandemic GDP level in 2022. What is even more important is the consensus that our country is in the beginning of a dynamic and sustainable new phase in its economy. It's up to us to make Greece even stronger and to reorientate its economy towards a more productive, outward-looking, competitive, innovative, and resilient growth model. I'm convinced that altogether we can and we will achieve this. Thank you once again for the invitation.
We would like to thank the Minister of Finance, Mrs. Staikouras, for voting these laws and creating a very favorable environment for expats to move to Greece, and for Greece to gain back the people who have left due to the financial crisis, the brain drain, as we call it. Allow me to thank again both the Ministry of Finance and the Embassy of Greece to the US for fully supporting our conference and taking it under their auspices. And now we will take a 5-minute break before we start our first panel with details on the subject of tax incentives from well-known experts on their field. We'll be back shortly.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax, finding creative ways to leverage the technologies that were probably created for other areas of the business. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway.
Atlantic Bank is a historical institution that coincides with the history of the Greek Americans in the United States, and I'm very privileged to serve as president of this organization. I'm a proud Greek by birth and American by choice. I can see and I can feel what a Greek American needs in terms of banking. Through this institution, I'm able to support Greek American organizations in the United States. I try to help clients, I try to help Greek American entrepreneurs. America is the country that gives you opportunities, and you have to grab them when they present to you, because you never know if you will have more opportunities on your way.
Welcome back. In the first panel of our forum, we will dive into more details on the new tax incentives for high net worth individuals, pensioners, and people who left due to crisis. The moderator on this panel will be Katerina Savaidou. Katerina Savaidou is a professor of tax and fiscal law at the School of Law of the Aristotle University of Thessaloniki and a lawyer of the Supreme Court. She holds a Jean Monnet chair in European tax policy and administration, and she has served as Secretary General for Public Revenue. She has a very long and impressive CV, details of which they can be found at the site of the Hellenic-American Chamber of Commerce. Let's welcome Ms. Savaidou, who is the one who will introduce the members of our panel. The floor is yours.
Thank you, Eftihia. Hello. And of course, thanks for the magnificent organization of this forum. So from my part, as President of Taxation Committee of ICC Greece, I would like also to welcome to today's virtual conference our guests. This conference, of course, is regarding the new tax incentives in Greece, and it is co-organized by the Hellenic-American Chambers of Commerce and ICC Greece. So good morning to everyone, or good afternoon for those who are watching us from Greece. And of course, in the first panel, the focus is given on tax incentives regarding high net worth individuals. So these incentives are provided in Greece by the Greek by the Greek government that followed the tendency that was also in other European countries that gave such incentives like Portugal or Cyprus. And it is worth mentioning that this initiatives was taken during the crisis. So that was an important step for the Greek government. It provided the new incentives, and we are going to see with our distinguished speakers the follow-up of these incentives. So we are going to discuss this topic with our distinguished speakers, Ms. Georgia Stamatelou, Ms. Athina Kalyva, and Mr. Chris Holidis. So, of course, the full CVs of our speakers, it can be found in the site of Hellenic-American Chamber of Commerce. So I will introduce the first speaker of our panel, Ms. Georgia Stamatelou, who is partner and also head of tax in KPMG. And she will present us the new incentives regarding the transfer of tax residency in Greece. So these incentives provided some exceptions, let's say, in the general rules regarding the tax residency in Greece. So we are going to see with Mrs. Stamatelou these exceptions and what are the advantages of these new tax regimes. So, Georgia, you have the floor.
So good morning from me too. Thank you, Katerina, and a big thank you to ICC and the Hellenic-American Chamber of Commerce for the invitation and for setting up this fantastic event. My job today is to give you a brief overview of the various regimes that we now have available in Greece. And before I do that, I would like to start with a very, very important note. The note is that the regimes are not here to make Greece a tax haven. The regimes have a very specific goal, which is to facilitate the people who want to come, live, spend their working days here in Greece freely without having the former hindrances that we have in the past from the Greek tax system. And what is the general rule? What will happen to you if you decide that you want to come to Greece? According to the Greek tax legislation, persons residing in Greece, so Greek tax residents, have to pay income tax in Greece on the worldwide income from all type of sources. So dividends, capital gains, payroll income, whatever you have. If you are a Greek tax resident, you need to bring it here, declare it here, and pay tax in Greece. Non-Greek tax residents, on the other hand, are subject to income tax in Greece on the Greek source income only. So whatever part of their income is generated here in Greece. An individual who is present in Greece for a period exceeding 183 days, so this is 6 months, give or take, during any 12-month period will be deemed to be a Greek tax resident from his first day of arrival in Greece. There are, of course, certain exemptions in the law for people who are here in Greece for special purposes like tourism, medical, medicinal, or equivalent personal purposes, on condition that their presence does not exceed the 365 days threshold. So the way the law is set up, if you come here and if you spend more than 6 months, then you have to pay tax on your worldwide income in Greece. You can imagine that this has been a little bit challenging because Greece is a beautiful country. It has fabulous weather. There are a lot of people who want to come here and spend more than 6 months, but they do not want to bear the burden of paying taxes here for income that they have earned somewhere else and not in Greece. And the Greek government saw this need and introduced the regimes that I'm about to explain to you. And what are these type of regimes? We currently have 3. The first one is the high net worth individual regime. In order to be able to apply for this regime, there are some certain conditions that you need to meet. The first one is that you should not have been a Greek tax resident for 7 out of the past 8 years before the year you decide to move to Greece. You need to make quite significant investment, if you ask me, meaning that you need to have a minimum investment of euro 500,000 within a period of 3 years. And you need to prove that either the person as an individual, their close relatives, for instance, your spouse, or a legal entity in which the individual holds the majority of the shares, has invested in various types. You can invest in real estate, you can invest in movable assets, or you can invest in shares of legal entities based in Greece. The second regime is the one that has to do with the silver economy, it's the foreign pensioner regimes. Again, in order to be able to apply for this regime, you shouldn't have been a Greek tax resident for the past 5 out of the 6 years before your move to Greece. And there is another condition in that regime. Your tax residency needs to be transferred from a country with which Greece has enforced an agreement for administrative cooperation in tax matters. To settle your mind, US fall within the scope of these regimes. The third one has to do with the effort of the country to reverse the brain drain wave that we suffered during the years of the crisis. And it is a special regime for people coming to work in Greece. Again, you can apply for this regime if you have not been a Greek tax resident for 5 out of the last 6 years before your move. You need to transfer your residency from a member country of the EU or from a country with which Greece has an agreement in force for administrative cooperation. You need to be an employee of an entity here in Greece, or you need to start a personal activity here in Greece. You need to declare your intention to stay in Greece for at least 2 years, and it applies for new job offerings, for new positions. What happens if you manage to apply and you are successful with your application? If you're a high net worth individual, you get to pay a lump sum tax of euro 100,000 on an annual basis. This extinguishes your tax liability on global foreign source income. This would include also a lump sum tax of euro 20,000 on an annual basis in case a relative utilizes respective provisions. For pensioners, you have an annual flat tax rate of 7% on foreign source income, and you have exemption from solidarity, even though we do hope that we will all have exemption from solidarity contribution going forward. And for the foreign individuals who come to work here in Greece, they are eligible to income tax and solidarity exemption of 50% of their employment income earned in Greece during the year. And of course, equally, this applies to people who operate as individuals and earn income from business activity. Now, there is an application deadline, and this application deadline should be met. So in order for a person to be eligible to fall within the scope of these regimes, you need to make sure that you apply by the stipulated deadlines. That would be 31st of March for the high net worths, 31st of March of each year for the foreign pensioners, and 31st of July for the people who come to work here in Greece. There is, of course, a time period in which you are allowed to produce the required supporting documents, which in the first 2 cases would be by May. In the third case, you need to provide the supporting documents with your application. This year, we have seen an extension due to the COVID situation, but generally, I would advise you not to rely on that. Please make sure that you apply within the requested deadlines. But of course, not all things can last forever. So if you apply and you fall within the scope of the special regimes, this has a time limit. For the high net worth individual, you can remain within the regime for 15 years. For the foreign pensioners regime, you can again remain within the regime for 15 years. And for the foreign employees regime, you can have this beneficial treatment only for 7 tax years. Does this mean that you will not file any returns? No, you will have to file returns here in Greece, and you will have to pay some additional taxes. For the high net worth individual regime, you have to file a return and report only Greek source income. You do not have any foreign tax credit, which makes sense because you're not paying actually tax on your foreign income. And there is an exemption from inheritance and donation tax on foreign assets. For foreign pensioners, again, you have a requirement to file a Greek tax return. You do have, though, the possibility of obtaining a foreign tax credit, and there is a little question mark here, a situation with inheritance tax, because this applies to pensioners, and we think this is something that we need to fine-tune. Similarly to the employees coming to Greece, you have to file an annual tax return. You report worldwide income. You are eligible to foreign tax credits as a normal Greek tax resident, but there is an exemption on imputed income from residence and private cars. There are some thorns, meaning that even though the framework is there are certain elements of the Greek tax, like imputed income on acquisition and possession of various assets, luxury tax, that again is calculated on various assets that have not been resolved, especially for the people that are within the scope of the high net worth individuals regime. And of course, we have experienced this a lot with people applying for from non-EU countries and who are not holders of a Greek passport. There are certain implications with visa requirements and residence permits, but so far we believe that these are small hiccups, and the administration has shown a lot of commitment to resolve all the practical issues that have come up. I think that's it from me, Katerina.
So thank you, Georgia, for your presentation. So we understand that there are a lot of important advantages for the people who choose to enter in the scope of these three new regimes. But of course, as you have said, there are specific requirements, specific conditions in order to apply for these regimes, and also specific deadlines that they have to respect. So everyone that wants to enter to the scope of these regimes should be really well informed in order to make use of these regimes. Thank you very much. So now we pass to our second speaker, Mrs. Athina Kalyva. Mrs. Kalyva is the Secretary General for Tax Policy and Public Property in the Ministry of Finance of Greece. Mrs. Kalyva will also going to give us some clarifications about the three new regimes, but of course she will focus on the objective of the Greek government and also on the implementation of these three regimes. So Athina, you have the floor.
Many thanks, Katerina. Many thanks, really. And I would like to thank the organizers as well for giving me the opportunity to be here today. I have a little technical problem with the share screen, but it doesn't matter. I will proceed to the presentation orally. It's not a problem.
Μήπως μπορείτε να μας βοηθήσετε λίγο από τα... Ωραία. Εντάξει, Αθηνά, ναι, δεν υπάρχει πρόβλημα. So, Athina, it's okay. You can proceed.
Yeah, there is no problem on this. I heard the previous speaker with all this knowledge that she presented, and I'm very happy to see that the private sector has absorbed all this, all the new things that we produced from the ministry. I'm quite happy because she was really detailed the whole things. On my side, I would say that for the first time that we resumed office, the new government in the Ministry of Finance, we wanted to, to develop the tax policies that will help us to respond to challenges and to give solutions in a changing world.
And of course, tax policy for us could play a very important role in this. Because tax policy, is not only a tool for sustainable revenues, it's a tool that if you combine with the modernization of the legislation, really you can boost the growth and you can impact on the rate of growth of the GDP, not only on the level. And for me, as a macroeconomist, I always say that if you want to use taxation as a part of your growth policies, you need to touch the two variables, employment and investment. And this is the important. So the whole set of these initiatives that was presented before, it was developed in this slide. For 2 years, I think I had in mind from all years before to do this kind of things. However, for 2.5 years, we were studying systems, we were studying policies in other member states, in third countries, in order to see and to develop a tax policy tailor-made for the needs that we wanted, and we felt that they were necessary. I heard that all these incentives, they were developed for wealthy individuals. No, it's not for wealthy individuals. I think it's for investors, for entrepreneurs, and people that they want really to enjoy and to live in Greece. Of course, the thresholds that we set upon, the 500,000 for investment, yes, if you look at from the perspective of Greece, it's an amount which is quite important. But if you think that this investment has to span in 3 years, it's not such a big amount for people that really they are in the market, they invest. So, of course, it's for people that they can afford it. However, I think that the thresholds that we have chosen in Greece to legislate, they are tailor-made for Greece, and they made, they are there to facilitate the investment. So, as Mrs. Stamatelou explained, the first incentive is for entrepreneurs. And of course, there are some criteria to enter in these rules, in this alternative taxation. There is some limitations. There is some duration for these rules. I never like to say that this is a regime. There are special rules derived from the general rules, I would say. I like it to present it as such. So, as Mrs. Stamatelou said, the first incentive is for entrepreneurs. She detailed all the rules that are included, so no need to come back. The regime has worked so far, and I will give some statistics at the end of my presentation. So it's quite successful so far, and we are hoping after the pandemic to accelerate all, and also if need be a secondary legislation, more detailed secondary legislation, if need to be developed, we will do it. So we want really to accelerate. The second incentive, the Article 5B, is exactly the response to silver economy. We wanted to only not to offer the good climate or all the other good life that you could present and put it on the table. We wanted to compete in a nice way, not harmfully, but to attract some people to come and to spend the rest of their lives here in Greece and to enjoy that. And of course, based on our general rules, it would have not been an easy task, this. So we wanted to create something new. We created this alternative taxation with a very favorable tax rate. However, again, I would like to come back and to say that this rate gives effective taxation. It's not less than 5%. It means that it's according to the international principles and rules, and it's very favorable. And these rules are in full operation. And I was very happy to hear that the tax administration is responding and they are doing a fantastic job by expediting all these requests and helping really, because here we have an independent tax authority that deals with the implementation. So the third incentive, it was the right from the need to respond to the brain drain, to do something about that, and we did that. Again, especially on alternative taxation. There we have not establish any new tax rate, and this with purpose, because here they were also able to enter in these rules. They were also self-employed and some kind of entrepreneurs here in Greece. So we didn't want to make a federal regime based on tax rate. What we did here is to work with the tax base. So we exempted half of the base from the taxation, and of course some other federal rules that they benefit really those that they've chosen to enter. But it's not only this, what we did. The approach was exactly holistic. And we, for the first time, we introduced in Greece the notion of the family offices. Mrs. Stamateou didn't refer so much to this, but it's a very, very attractive notion. It has been debated in the media and also in the parliament, because again, they were telling that it's for wealthy individuals, etc. Of course, it's for families that they have cash flow, they have property, for sure. It's here, this notion works for high wealth individuals. But in Greece, what we did here, we had and to introduce a request of 1,000 expenditures that they have to make in Greece, expenses that they have to do that in Greece in order to be able to be taxed according to the expenses. They are taxed based on the cost plus method. It's an OECD method, so it's quite clear, and it's according to international rules and principles. All the rules that we have done, yes, as said, they derived from general rules. It means maybe they create, they are tax expenditures at some point. If you measure it in the macroeconomic scale, they are tax expenditure. However, what you may gain from the other part, from the revenue side, or with the whole facilitation for investment in Greece, clearly might compensate all these losses that you do by introducing rules that derive from the general rules of the tax system. When I started, and I was puzzled when I came and I took the office, what to do, because I didn't want to do the same thing. I wanted to do something different. That all the principles that I explained, they were quite important for me and for my team. And of course, we had the support of the minister from the day one. And I always thank him because he let us to work with this kind of things. And for the first time, we adopted this holistic approach. For the first time, we have ownership in Greece for something, for a reform, for an important reform. And also, we were setting the timetable as exactly we wanted. There was not imposed by the European Union, there was not imposed by third parties. It's our own product. And I'm very happy that, and I can see that every day that people are very interested, and the private sector has really worked with this. I could give, and just I will give some statistics, although you may understand how difficult it is due to the pandemic to apply this kind of rules. However, just from the Article 5A, for the first 2 years, we have, for the moment, 75 investors, and 23 relatives coming from 21 countries, from EU and 15 non-EU countries. However, we have with all of these agreements based on the OECD model or administrative cooperation. For Article 5B, we have more than 200 pensioners. They've chosen Greece as the place where they will come and benefit for the first time from the tax system. For Article 5C, which is the brain gain, I could say, which covers also digital nomads, which is, quite discussed nowadays, and it's a form of a type of employment that it's more and more popular. It's a great success. We have more than 1,000 applicants. And for the family offices, we need, because it's legislation that came in force quite recent, we're working for producing the secondary legislation, which is needed to make it real and applied and implemented. But the case is there are many applicants already that they are coming and they try, to start a family office, but we need the secondary legislation. So there are many people that they are interested, families that they want to use this special notion of enterprises to manage their own cash flows, benefiting, but not being untaxable. Okay. So, and all this resulted in also in having concrete revenues, for the budget. We have 1.9 million in 2020 for the 5A, 7.5 million in 2021, and for pensioners now we have because now they are starting to submit their tax return, so the revenues they are not a lot. They are just now 20,000 euros, but in any case, we will have more in the coming year. And also, you can imagine with the tax returns that they will take next year, how much revenues we'll get from the Article 5C. So, concluding, I will say that this is, for the moment, it's a great success. I'm pretty sure and confident, because we were very careful, taking into account everything, all the regulations from the EU law, from the OECD model, from all the other examples that have been applied in the EU and third countries. I'm very confident that this will fly in the coming years and will have concrete results. Many thanks.
Thank you, Athina, very much. So we understand that these new regimes are really a great tool for the government in order to increase public revenues, but also for attracting investments in Greece. And it is very nice that to know that it's already successful, and so we have already results. And now we are going to pass to our third speaker, Mr. Chris Holidis, who is the president of CNG Global Consultants LLC, and also a former IRS examiner and US tax preparer. Ms. Chris Holidis is going to present us the US tax filing requirements for US citizens that live abroad, and of course, we're interested, of course, in Greece. So, Mr. Holidis, you have the floor.
Thank you very much. I want to begin first by thanking the Hellenic-American Chamber of Commerce and ICC for honoring me and having me as a speaker. And I wish much success with the entire event. I do wish to say that Ms. Kalyva and Ms. Stamateou did an excellent job to cover all the aspects concerning the Greek side and the Greek government. And if I may say this, I'm here really to speak about the requirements that are due on the U.S. side and in regards to the requirements of the U.S. government. One of the things that has been misunderstood for many years in relations to the Greek American community, and allow me to say good morning to everybody in the States and good evening to those in Athens who are honoring us with their presence, is the fact that many Greek Americans believe that if they move to Greece, they're not required to file U.S. tax returns. Already, Greek Americans who are living in Greece have the same misunderstanding. Under IRS code, it is very clear, just like the Greek tax code requires Greeks to report all their worldwide income. Under IRS code, it's the same exact thing. All U.S. citizens living abroad are required to file their worldwide income. So the investors obviously can take advantage of the 7% rate, which for us tax advisors, always when we hear rates like those are very excellent and low rates. But at the same time, they need to know that they will still continue to file taxes back in the United States. Now, what has the U.S. government in cooperation with the Greek government done to help them, though, in making such a move to move over to Greece? For many years, they have had the tax treaty between the two countries and also other IRS codes which were put in place for Americans who are living and working abroad. What will I cover now? I will cover what are the advantages that a U.S. citizen living abroad can take in order not to have double taxation. So if the Greek American who wishes to move, let's say, from New York or California or anywhere else to Greece and live here and work here, what he needs to know is the fact that, yes, he will be filing taxes back in the United States, but he can take advantage of, number one, for example, the foreign earned income exclusion. What does that mean? That means that any amount, if I use the numbers of the 2020 tax returns, which we had, any amount which is below $107,000 is deductible, meaning it is not taxed at all back in the United States. So that is one of the means that they can take advantage of not having double taxation. Another way that it's done, because we may, as we heard, we're talking also to high income individuals and high wealth individuals, which will have more than $107,000. The other way we could take advantage of that is by doing what? Having our foreign tax credit. That means what? That means that as they file their Greek tax return and they pay their taxes here in Greece, when we file their U.S. tax return, we take credit of those taxes paid back into our U.S. tax return, okay? So that is done in order to avoid double taxation. And yes, they could definitely do both by using the foreign earned income exclusion and also using the foreign tax credit. Up to today, I have not seen situations where somebody has come to work to Greece where they had to pay during their taxes back in the United States. It's basically a typical situation which they have to abide, okay, because that is the law and that is the IRS code. But they should definitely take advantage of the lower tax rate of the 7% that the Greek government is offering for individuals who want to come and work here. Now, another item, and allow me to say a parenthesis here, the reason why I said it has been misunderstood and people are not properly informed about their tax requirements back in the United States is because we saw this a lot during the stimulus payments that we're giving to people. Because the United States government, due to COVID, decided to assist all Americans, not making any difference between those who are living in the United States and those who are living abroad, they sent such payments to Greek Americans in Greece. Unfortunately, the information that they were getting was that they do not have to file taxes in the United States as long as they file their tax return in Greece. That does not exist. I want to close that topic. I want to be very direct and I want to be very precise. IRS code requires Greek Americans to file back in the United States. Now, what's another item? Can I continue? Okay, what's another item which is important for the U.S. citizens who are going to come and live in Greece to know? The other requirement besides the U.S. tax returns is the what we call FBAR requirement. That is, your foreign bank accounts have to be reported back into the United States. Now, there is an amount there that we use as a framework, meaning that the total of the accounts which are outside of the United States, and in this situation we're referring to Greece, have to be $10,000 and above. So if you have a lot of accounts or even one account in Greece, which is less than $10,000, that does not need to be reported on an FBAR. Accounts which are above those amounts, yes, they have to be reported. Now, a lot of the already living Greek Americans in Greece have noticed that through the Greek banking system, because the Greek banking system is the one which is collecting all the information concerning that and giving it to the Bank of Greece. What I need to emphasize here also on this matter, and I need to clarify for all Greek Americans who have foreign bank accounts in Greece to know, is that the banks are asking them to either complete the W-9 form or the W-8 Ben. The W-9 form is for US citizens. They are required to file the W-9 form. Unfortunately, some of the branches of the banks are not well informed. The staff is not well informed, and they may give them both forms and tell them decide which one you believe you need to complete. I want to emphasize that all US citizens are required under US law to complete the W-9 form. Okay, it's a simple process, but I want them to do that. The reason why I'm saying that is because if there's any mistake done and there's double checking on the accounts and you complete the W-8 Ben form instead of the W-9, it appears like you're not presenting yourself properly as a US citizen, and people do not want to make such a mistake. So basically we have our US tax returns, which are required to be done, and we also have our bank accounts, which are required to be reported, okay? A third item, which is very, very important for somebody who will be coming and living in Greece and is not very wide known, is the area of gifts. I want you to know that under the IRS code, any US citizen who receives a gift from foreign national, in this situation meaning from their Greek aunt, from their Greek cousin, from their Greek father, because we have situations where the children are back in the States with US citizenship, but the father does not have citizenship. Under US law, they are required to report that back into the United States. But what is the beauty of it? The beauty of it is that it's not taxable at all. There is no tax for any gifts of US citizens coming from foreign nationals. So basically, I would like to say that this is a good opportunity for people to keep in mind that they will continue to do their tax returns as they're doing back in the United States. There is a requirement of a 330 days living outside of the United States in order to be able to get the exemptions, okay? Just like on the Greek side, they require you to stay 6 months here. In order for the IRS to allow you to get the exemptions, you have to be living outside of the United States for 330 days, okay? And basically, besides the aspect of having somebody to work abroad, I want to cover one final area, and that is somebody who may wish to invest abroad, okay? If someone is going to come to Greece to invest in Greece, obviously, we all know that there are a lot of great opportunities in Greece due to the fact that Greece had passed through a crisis, and there are many opportunities now as it's developing again. I agree with what Ms. Kalyva had said, as Minister Staikouras understands these things very well, and they're doing an excellent job at the ministry for that, okay? And I think that there are investment opportunities. What I want to mention there also, though, is that the U.S. citizen who is investing here, who will form a company in Greece, okay, has to remember that they are also required under the IRS code to do annual reporting of the fact that they own a company outside of the United States, okay? We cannot leave that like that. They have to know that besides their personal tax return, they also have to inform the IRS that they are owners of companies and investments outside the United States. I would like to conclude with one thing by saying this. Based on the agreements between the United States and Greece, the laws are such in place that somebody is not penalized with double taxation, because people are worried that if they have to follow in both systems, they will have to be paying taxes 2 times, and then they're going to have higher tax rates and everything else. I want to make it very clear that's the main reason why the US government and the Greek government have the tax treaty between the two countries.
Thank you, Mr.
I think I don't want to get too much into the details, because this is something, if we want to talk about the detail of taxation, that we could have a few hours of presentations. I wanted to basically cover the main framework and to let these people know that what is their requirement from their side, and at the same time, the advantages that they have as U.S. citizens living outside of the United States.
Thank you, Mr. Holidis. Really, you have enlightened us about the tax obligations that the U.S. citizens have even when they come to Greece to live or to have other activities. And also, it is important to understand that even the fact that they choose to come here, they still need to have some filing requirements in the USA.
Well, allow me to say that under the excellent leadership of Ambassador Pyatt in Athens and the previous U.S. ambassadors, the U.S. Embassy in Athens has done an excellent job to try to inform the Greek-American community of their requirements. So it's something that's a continuous effort of information, and it will always continue to go on.
Yes, it's important, very important. So now we will have some time for some questions. And so, Georgia, I would start from you. So we have seen the requirements for entry into the new tax regimes in Greece. But I'm wondering, in most of the countries, the transfer of tax residency needs also the physical presence of the person in that country for a certain period, for example, 60 days. So this requirement is not provided in the Greek legislation.
There's no explicit need, especially in the special rules. Let me follow Ms. Kalyva's lead, and I will not call it regime, in the special rules applying for high net worth individuals. But I think there is a very specific guidance from the Greek administration that people who apply for these rules, for all three type of rules, should really fulfill the requirements of physical presence in Greece. I think for the last case, I mean, it's obvious because people come and work here, so we would anticipate them to be more than 6 months in the country. But for the pensioners and for the high net worth individuals, this is also very critical that they are here in Greece for more than 183 days, because we need to remember that it's not just Greece. We have another country in the other side from which they're leaving. So they need to have the physical presence to substantiate their case, especially for the country they're living from.
So it's not expressly provided, but we understand that in order to respect the double treaties and also the Greek legislation, we need to have a minimum physical presence. Thank you, Georgia. Ms. Kalyva, Athina, I would like to ask you, so it's a question a little bit, critical, but we have seen recently some articles in the newspaper that criticize these new regimes. Especially they consider that the new measures are not, let's say, are not respecting the fair competition in the European Union. So what is your opinion about that?
Thanks, Katerina, for the question. Really, I've seen this article, so I didn't want to respond one by one to this.
Of course.
However, today it's a very good opportunity that you are giving to me. First, so far, to my knowledge, we don't have harmonized rules for personal income taxation in the EU. We have harmonized rules for corporate taxation. Soft law, however, it's politically binding, the Code of Conduct for Business Taxation, with the criteria where there is the definition of the harmful tax regime. Personal income taxation is the sole responsibility of the member states, unless there is really a risk for a fragmentation of the single market or preventing the fundamental rules of the treaty to be applied. Of course, here it's not the case. Also, we have the European semester. We have some key recommendations where touch upon the tax competition. However, they never went to detail or to develop key recommendations on personal income taxation because it's not allowed. For this reason, we started to do reforms exactly from the personal income taxation because we had rooms to maneuver and rooms to develop and to create the new system that we have. So there is no issue on this. There is no tax ruling applied with the individual person. There is enforced administrative cooperation. There is no rule that will prohibit the country-by-country report, which is also adds to the administrative cooperation. There are international accepted principles applied, the cost-plus method, and there are the normals and the standard rates applied, although maybe reduced, but it's effective taxation. So really, there is no violation in this. I'm pretty confident on this. Many thanks.
Thank you, Athina. Okay, it's I think it's the answer on this criticism that has been lately in Greece. And one last question to Mr. Holidis. So from your speech, Mr. Holidis, I understand that US citizens who comes and works in Greece are not double taxed. Can you give us an example in order to understand better this non-double taxation?
I have many such clients, and I've been receiving the last year many phone calls on people contacting me on this basis because, fortunately enough, there are opportunities for those who are living in the States to come and work in Greece now with multinational companies who are here and also Greek companies who want them to work here. And I'll give you an example. A young lady who is a professional from New York called me up and said to me that she got an excellent offer to come and work in Athens. She mentioned to me about her salary, how much her salary was. And at that point, her first question was, will I be taxed on this since I'm going to be paying tax in Greece? And I informed her, based on what I mentioned earlier, that since her salary was at $90,000 and it falls under the $107,000, she has no taxes to pay back in the United States. Basically, the only thing she had to do is just fill out her tax return, take the exclusion, and she's fine. At the same time, I would say to you that I also had another situation where we had a gentleman who was offered a position here in Greece as a CEO, and his salary was at $1 million, okay? In that situation, we took advantage, and this is something that we have discussed, of the foreign tax credit, and it makes life easier for them. The bottom line in all this is that the agreement between the two countries allows these people, the scientists, the educated people, those who want to really help also in coming back to Greece, to be able to work here and not have to worry about this misunderstanding that they're just going to tax. They have nothing to worry about.
Thank you, Mr. Holidis. I think it's very clear after what you have said to us. So I understand I have a lot of questions. I think our audience has also a lot of questions, and we can discuss for all of these issues for hours. But of course, due to the limited time, we cannot have a further discussion. So I will go directly to our second panel regarding some alternative tax incentives that came and supplement the three first regimes that we have already discussed in the first panel. So we have with us Mrs. Aspasia Maliou, who is partner at Potamitis Vekris Law Office, and she's going to give us some clarification about these alternative incentives, and especially the family offices and angel and IRD incentives. So, Ms. Maliou, you have the floor.
Thank you. Well, good morning to everyone. Good evening. I'm very glad to be among all of you because you are interested in Greece, the country where I was born, raised. I'm working here and I love my country, so it's a good opportunity to talk about the country. Thanks, ICC. Thank you, Katerina. So I'm here to discuss with you whatever you would like to ask me, and I am at your disposal. I think that we have to consider a little bit let me see. The first question that I would like to discuss with you, the first remark is why invest or come to Greece now? Is now the right moment? And I think that COVID-19 was and it is a major shock, but the Greeks' response was and it is swift and proactive and generally effective. Our economy is expected to rebound with growth projected at about 7%, which will be realized as we are on December and the 2021 year is just finishing. And we are expecting a growth of 5% during 2022. Greece's recovery plan provides for grants and loans 5.3 billion each year from 2022 to support digital and green investment, strengthen skills and employment, boost private investment, and transform economic and public institutions. Strong market signs appear for a pickup in tourism and real estate, funded not only from internal local investors, but also for international funds. This government is committed to improve investment climate and reduce inefficiencies, and ambitious governmental plan already expressed is targeting to modernize the real estate regulatory framework. Major investment projects are underway. Ελληνικό, Kylyva Hills, Kassiopi, Corfu, Eluda, Gournes, Vula Project, Larko, Public Electricity Company, Waters, Harbors, Airports, Roads. So we have something that is changing in our country. And we also have the boost to reduce the tax burden in order to be more friendly to every individual private wealth or business capital that can come inside the country and stay here. What we have done during the last 2 years? We have suspended the tax on capital gains for real estate transfer till the end of 2022. We have exempt many income sources, among them capital gains and dividends from special solidarity levy. We have also introduced the 3 different regimes for individuals to become Greek tax resident, as already presented by my colleagues. What we have done for the companies, we have reduced the corporate income tax rate to 22% for tax years 2021 and onwards. And we have a major decrease on the rate on dividends, the taxation rate on dividends. Now we have a very attractive 5%, which is very attractive for all around the world. We also have tax benefits on EU shareholding structures, zero withholding income tax on intra-group payments, dividends, interest, and royalties. Also capital gains exemption in intra-groups transactions. Last but not least, a new bill on mergers, transformation, and cooperation between small and medium-sized enterprises is about to be issued, with a tax incentive in form of 30% decrease in corporate income tax for 3 years. So I think now is the time to be in Greece, to become a tax resident in Greece, or to invest private wealth or business capital in Greece. In that frame, a new provision that comes to help the three regimes that already presented to you, 7A, 7B, and 7.3, is the provision for family offices according to the Greek, is a new provision according to the Greek Income Tax Code. What is a family office? A family office is a special purpose corporate vehicle for family property management. This is familiar also in other countries. We can have the example of Cyprus, or we can have the example of Singapore. But usually we don't find a specific legislative framework as we have now in Greece. What a family office does? A family office is managing or administrating exclusively cash flow and estate, internal or abroad, of Greek tax residents and members of family. In the law, the meaning of members of the family is well provided and is restricted for spouses, unmarried children, and direct ascendants. A family office can take any form of shared company provided by internal law. Non-profit legal persons are excluded. Member of the company which is going to become a family office can either be the individual directly or a legal person on his interest. Up to the moment, the provision has been applied only in cases of the transfer of tax residency. The law provides only the type of single family office. That means that it can be created only for members of the same family, as a multi-family office is not provided. Up to the moment, we don't have a defined spectrum of services, meaning that a family office can rent services from housekeeping to fund management. These services should be rented directly to individuals and not to legal persons of their interests. A family office can be administrated from employees who should not be members, or third parties, local or foreigners. The residency of any legal person owned by the family is not automatically changed because it takes part of a family office. And still, because the provision is quite new, an administrative ruling is pending. So this is the legal form for a family office. Why a family office is attractive, is tax attractive? It's tax attractive because a cost plus allocation of profits method is applied. Is a method similar to the one applied on offshore companies that works here from Greece. Addition of a percentage 7%, a markup 7% to total business expenses, corporate income tax excluded, creates the base of tax that applies on family offices. What is the tax that applies? Is the corporate income tax that is provided in the internal law. For the members, and if distribution of profits takes place, taxation of dividend applies at the rate of 5% as already stated. Transactions carried out between the family office and the family members are VAT exempted. Is there any condition under which the family office can take advantage of this special beneficial tax regime? Yes, it is. Operating cost increase of at least 1 million euros on an annual basis, and at least 5 employees within 12 months of the establishment. So, if you are planning to become a Greek tax resident using the beneficial 3 types of the new provisions that they are already explained to you, you have the opportunity to think if you would like to establish a family office in Greece in order to take care of all your investments all around the world and enjoy a tax benefit. Moreover, Greece has provided the form of the angel investor. What is the angel investor? The angel investor is an individual who would like to inject money, inject amounts, funds, to a newly established share capital company, a startup, which should be registered in the special National Startups Registry. The individual can choose either to inject to the share capital or to purchase the shareholding right. What is the benefit of that? An amount equal to 50% of the injection is deducted for the individual investor and from his taxable income in Greece, proportionally per source of realized income. So you are going to pay 50% of tax for the money you have injected. Is there any cap? Yes, it is. Up to 3,100 euros per fiscal year, up to 100,000 euros per company, and up to 3 startups companies. And to conclude the presentation, we also provide for a tax benefit for expenses for scientific and technological research, R&D expenses. What is the scope here? The scope is to increase the GDP percentage from about 1.2% to the average 2% in the US countries. What is the tax benefit that we would like to have? Is the deduction of the expense in the year it is incurring, depreciations included, plus an increase of that 100%. That means that if you spend €1 for a scientific and technological research, a deduction of €2 from your gross income will take place. What is the condition? The condition is at the same time, alongside the submission of the tax return, either you have to submit or supporting documentation at the Ministry of Development with the right of the ministry to inspect within 10 months, or having an audit report with the supporting documentation submitted again in order, first of all, to have the reassurance of the real that the expense was real, and afterwards that the expense is of the category that the legislator would like to characterize as an scientific and expense scoping on scientific and technological research. What is scientific and technological research? Generally is accepted to be the creative work aimed on a systematical increasing of knowledge and the use of knowledge in order to invent new or ameliorate older applications. A research of this kind can be of 3 different categories. The basic one, which is an original free scientific choice of work, an applied one, which is an original research work for practical objective, an experimental one, which has the goal to produce new materials or goods or improve the already existing ones. In an administrative ruling, a restrictive description of the characteristics of the expenses is included. So, to sum up and leave some time for your questions, I have to say that nowadays, Greece is trying to become an attractive place for investment, either of private wealth or of business capital. Thank you very much for the time being.
Aspa, thank you very much for your presentation and the clarification for all of these new regimes that supplement the regimes for physical persons. Unfortunately, we don't have time for questions. We need to make questions, but we don't have the time. So thank you very much. And of course, I would like to thank all the speakers of the first and the second panel. So now we will have a short break of 5 minutes, but don't leave, because we will come back with our third panel, a very interesting panel regarding taxation of real estate and also golden visa. And the moderator will be Eftihia pylarinou-piper. And of course, Eftihia, I'm really jealous. I'm seeing the image behind you with the Christmas tree in New York. So I think we all here in Greece, we jealous, but okay, in Greece is also very, very nice. So thanks all of you, and we are going to do a 5-minute break. Thanks.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax, finding creative ways to leverage the technologies that were probably created for other areas of the business. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway.
Atlantic Bank is a historical institution that coincides with the history of the Greek Americans in the United States, and I'm very privileged to serve as president of this organization. I'm a proud Greek by birth and American by choice. I can see and I can feel what a Greek American needs in terms of banking. Through this institution, I'm able to support Greek American organizations in the United States. I try to help clients, I try to help Greek American entrepreneurs. America is the country that gives you opportunities, and you have to grab them when they present to you, because you never know if you will have more opportunities on your way.
Welcome back. Allow me to thank all the speakers of our prior panels and congratulate them for such an amazing presentation. I have to say that we were overwhelmed with questions that they were coming from our participants, and we would need many hours to address. But as Katerina Savaidou mentioned before, there are a lot of important advantages and also specific conditions and deadlines. If you need advice for your personal issues, our speakers, their contact information will be available on the site of the Hellenic-American Chamber of Commerce, and the whole forum will be up starting tomorrow. And now let's go into our panel that addresses real estate opportunities and taxation, tax-free limit for transfer of assets to family members, Enterprise Greece, and Golden Visa. I'm very pleased to introduce to our audience our three panelists. We have with us George Kormas, the Executive General Manager and Group Chief Real Estate of Piraeus Bank, Piraeus. We will discuss with Mr. Kormas the state of the real estate market in Greece and opportunities of investing. We have Mr. George Filiopoulos, the CEO of Enterprise Greece. Mr. Filiopoulos will tell us about how Enterprise Greece matches investors with investment opportunities in Greece, and we'll touch upon the investments made under Golden Visa and the positive effect they had on real estate in Greece. We also have Ms. Marina Allamani, who is a tax partner of Zepos Yannopoulos Law firm. She will speak to us about taxation related to buying, selling, or owning real estate in Greece. She will also talk to us about transferring real assets to family under a recent voted law, and it's what we call γονικές παροχές in Greek. We will have a discussion with Mr. Kormas and slide presentations from the other two speakers. At the end, we will have a panel discussion with questions from our audience. And without further delay, I'd like to start a conversation with Mr. Kormas. Mr. Kormas, in addition to being the Group Chief of Real Estate, Piraeus Bank, he's also a member of many executive committees at the bank and the CEO in subsidiaries. He has served in the past as advisor to the governor of the Bank of Greece and has worked for the European Central Bank. Full CVs of our prominent speakers can be found at the Hellenic-American Chamber site. Mr. Kormas, welcome to our panel. You are our expert on the real estate market and the investment opportunities that it represents. We all know that the values of real estate assets and the real estate market as a whole are interconnected with the state of the economy. And you have lived through the economic crisis, and we have seen valuations of properties to sink sometimes 75% from their original valuations. But the present government's economic policies, even with a slowdown due to COVID-19, have already resulted in unprecedented numbers of growth for the Greek economy. So with such optimistic perspectives about the economy, what is your feeling about the future growth of the real estate industry in Greece? Could you give us a brief overview, please?
Good afternoon, Ms. Pilarinou and distinguished panelists as well, and everybody that is following us online right now. I would like to start by thanking the Hellenic-American Chamber of Commerce for this opportunity to speak and give my opinion on the real estate market. As you correctly already stated, Ms. Pilarinou, the country has suffered a severe financial crisis that was not definitely related actually to a banking crisis, but it then resulted to a banking crisis as well. So now we have a country exiting this 10-year severe crisis, and in order to associate myself with the rest of the people who are following us right now, I myself returned back to Greece back in 2011 in the middle of the financial crisis, and I since then live there and really experienced the outcome of the crisis. Since 2018, the entire situation started changing, and indeed the new government has created the institutional framework that is needed in order to exit in a different way a crisis of that dimension. What I mean to say by that is the following, that I will not I will exclude COVID-19 effects right now, and I will talk to you more generally. So since then, since 2018, due to the economic recovery, the environment has become more friendly for investors and investments in real estate. Real estate is directly correlating to the gross domestic product expansion. And since we are experiencing a growth right now, this is definitely affecting the real estate prices as well. Obviously, and as we all know, there has been the COVID-19 crisis in between. Nevertheless, for the real estate, at least for Greece, but for other regions as well, has had an effect only in the number of transactions that have been taking place and not on the asset values. What I mean to say by that is that since the recovery started and with a positive GDP and growth outlook for the entire country, it goes without saying that there is only way, and this way is up. We have experienced prices recovering from decreases between 40 and 60% in the 10-year financial crisis. We have not yet reached the before crisis level of prices, and there is still a way there to go. But nevertheless, this is the direction, and the positive outlook is the only way I could describe in a way the development on the real estate market.
There are different types of real estate investments to be made. You can be an active investor or a passive investor. You can invest in office, industrial, or residential assets, or even hotels. Can you give us your expert opinion as to the expected returns in each one of these types of investments for investors?
I will start by stating and making a comparison that may be very beneficial, or at least is very beneficial in my eyes, in the calculations and the investment planning of our distinguished guests and the people who are following this panel. And I would like to say the following. Investing in real estate in Greece is currently the best way somebody can approach a real estate investment at a European level. Why do I say that? The reason behind it is that because of the 10-year deep financial crisis, the entire market has been left undervalued, whereas the rest of Europe has entered a real estate circle, and now they are exiting this real estate circle, meaning that if we make a European comparison, like for like, Greece is at the beginning of an expanding real estate crisis, whereas the rest of the European countries are now reaching the end of this very same circle. What I would like to stress at this stage is the following, that Greece is in the very lucky situation that successfully managed the problems that were relating to Brexit and similar, as you can all recall, back in 2015. The reason that we are now discussing about real estate opportunities in Greece is because Greece managed to stay and be a member of the European Union, and in particular of the EU area. I don't like to draw any direct comparisons, but we all know that there had been enormous real estate opportunities for investing in countries, in neighboring countries to Greece. we are now all following on the news what is happening with these countries at the financial level at the moment. What I mean to say by that, one of the most important things in investing in general, but in particular as well in real estate in Greece, is the political and institutional stability that is now given, which helps all investors to correctly assess any risk and obviously compare apples with apples within the European Union and make the right investment decision. Just to give you an example, logistics, which is a hot topic at the moment and highly traded, for a potential investor coming outside Greece, the only reason, not the only reason, the way to make the comparison, the investment decision is the following, that you do have and earn a better yield in Greece compared to a logistics center somewhere outside Berlin or outside Paris or similar European capitals. There is a spread there at the moment that reaches almost 4% between similar investment projects. So I see no reason why not come and invest in Greece. Okay. The same applies, obviously, other hot rated sectors of real estate are residential real estate, which is upcoming at the moment. And after a 10-year of no new developments, we now experience new developments as well, which will be added to the existing stock that is already on the market. And obviously then offices. Grade day offices. I'm talking about grade day offices. It's a very good example of the Greek real estate market. I would like to to make a small remark on that the Greek real estate market doesn't necessarily have the depth of other markets like the US market, for example. As of that, this creates either shortages or oversupply of certain asset types. As with regard to grade A offices, for example, there has been a shortage before the start of the rally that we are now experiencing in real estate, because there hadn't been any new developments. And another important aspect I would like to add here, which applies for all real estate asset types, but mainly for offices and logistics and industrials, is the approach that the European Union in general applies to all future developments, meaning that we are all practicing under the sustainability principles and circular economy as well. And for buildings that are certified according to international norms that do specify and guarantee that those principles apply, are scarce at the moment. So if I were to give an advice, it would be to invest in buildings or real estate that does follow this principle and has these certain stamps or rubber stamps of either LED or DGNB or similar norms that do certify that. This is the future of real estate, along obviously and hand in hand with the digitalization that takes place in other areas of the economy as well. And obviously real estate, although it may at first glance seem to be not necessarily something to associate with digital, it is not the case, and it is something that unavoidably will be part of it, is already part of it.
Okay, I have a lot of more questions for you, but we need to move on to the next speaker. We'll come back at the panel discussion. Our next speaker is Mr. Filiopoulos. the CEO of Enterprise Greece, Greece's national investment and trade promotion agency. Before serving in the public sector, Mr. Filiopoulos worked as a business executive for various companies and organizations in the US and Greece, and he is well prepared to address the challenges of attracting investment.
Good afternoon, Ms. Pilarinou, and good afternoon and many thanks to the organizers of this forum on the tax incentives that Greece offers, and of course to all of you for joining us. I have a short presentation to share with you. Is it on the screen? It is on the screen, yes. Right? All right, excellent. And let me say a few things about our organization, Enterprise Greece. Enterprise Greece is very often the first point of contact for foreign investors who look to invest in Greece. And we also manage the Fast Track program for strategic investments and the Golden Visa program. At Enterprise Greece, we provide a one-stop shop for investors. And following international best practices and working with all relevant stakeholders, we provide a set of integrated services. And we take an investment from the initial planning and scouting stage all the way through full implementation. We maintain a portfolio of existing investment opportunities, and we'll also consult with investors to find the project that best suits their needs. For greenfield projects, we will prepare customized investment proposals. We will provide up-to-date information on licensing and regulations. We will assist with location scouting and with HR in Greece. Now, we are the bridge between policy and practice, and via this role that we have, we listen carefully to our stakeholders and act as advocates at the policy level, suggesting changes in the legal framework for investments. Greece has become a very attractive investment destination by global standards, and we have seen several dozen major multinationals invest in our country in the last 2 to 3 years. In this context, I would like to highlight our carefully scouted and researched investment portfolio, which, as I said, is relevant both to companies and to individuals who would like to establish residence in Greece. Potential projects go through a careful vetting process. If accepted, we gather all the necessary material, and then we sign an NDA with the project owner to protect confidentiality. Then, Enterprise Greece, my colleagues and I, will package the project for presentation to potential investors. Now, if an investor is interested in pursuing a specific project, we act as a matchmaker and introduce the two parties. The entire process ensures maximum confidentiality to all parties, and the final negotiations are exclusively between the project owner and the investor, and they do not require any involvement by Enterprise Greece. We are only get involved if both parties ask us to get involved with a specific purpose and specific goal. Naturally, however, we are always available to consult with the investor regarding any questions or issues that may come up. Now, when it comes to establishing residence in Greece, the Golden Visa program is one of the main avenues for non-EU nationals to establish residency in our country. So far, the program has attracted significant residential real estate investment, with applicants buying more than 1 billion of real estate, mostly in and around the area of Athens. At the practical level, the Greek program is particularly generous, allowing investors to obtain residence permits not only for themselves, but also for their extended families. It should also be noted that in spite of rising real estate prices in Greece, as Mr. Kormas said earlier, Greek real estate is still very well priced, especially compared to other European countries. Now, the threshold to qualify for the Golden Visa program is 250,000 euros, and investment in both greenfield and brownfield projects are eligible in addition to real estate investment. It is also possible to qualify through investment in intangible assets, but with that option, the threshold rises to 400,000. Here are the three options. Now, I think that in the previous panels, there was a discussion about established residence in Greece and take advantage of an array of tax incentives. We have a special program for foreign retirees, the new non-dom regime, the digital nomads, and so on. So from our perspective, Greece's economy is well positioned to attract global businesses and investments. And we are thankful to the Hellenic-American Chamber of Commerce and the International Chamber of Commerce for offering us this amazing opportunity to inform US investors. Thank you for your attention to this presentation. And of course, we welcome all your questions and all your inquiries for assistance with investment matters in Greece.
Mr. Filiopoulos, I would like to thank you for your excellent presentation. Now I'm pleased to call upon Ms. Allamani, who is a tax partner and co-heads the real estate practice of Zepos Yannopoulos Law Firm. She has extensive experience in real estate projects, and she regularly advises international and domestic clients on the structure of acquisitions and variety of tax issues relating to real estate. She's admitted to the Athens bar, and she is also admitted before the Court of Appeals. Ms. Allamani will try to walk us through the tax considerations for buying, owning, or selling real estate assets in Greece. This is a very broad subject, and she has to take us through it in less than 10 minutes. She has prepared bullet points of the various Greek taxes during the life cycle of a Greek real estate investment, and we decided that the PowerPoint would be best and most useful to take us through so many various taxes. And Ms. Allamani will also touch upon the newly voted law of transferring assets of 800,000 up to 800,000 euros in γονικές παροχές, tax-free to immediate family members. Mrs. Allamani, the floor is yours. We can't wait to hear your presentation.
Thank you very much, Ms. Pilarinou, for the introduction. I'm very glad to be with you. Thank you for the Hellenic-American Chamber of Commerce and ICC Greece for the invitation. Let me share my presentation with you. Screen. Just one moment to solve the technical matters. And here we are. So my topic, my contribution in this panel is to discuss about tax aspects, or to rephrase it, what you need to know about taxation. My purpose is twofold. The first one is to present the main taxes that are relevant to real estate transactions and Greek properties. And the second one is to give some insight around the structuring of the holding of Greek real estate. Let's start with the Greek taxes during the life circle of the Greek investment. And it is obvious that reference will be made to the taxes upon purchase, during the holding period and upon exiting. In terms at the time of the purchase, one would expect to pay either real estate transfer tax at 30.9% or value-added tax on transfer of new buildings at 24%, which, as stated by the previous speakers, is currently under suspension until 2022. During the holding, one may pay income tax or corporate income tax. He or she would definitely pay the annual property tax, the so-called Eftihia, which is assessed on the owner that holds the property on January 1st. And this would be the exceptional situation of the special real estate tax, which would apply only if no exemption applies. Upon exiting, there would be either a capital gains tax, again under suspension for private individuals, but still taxable in case of corporate entities, and gift or inheritance tax. Apart from the taxes and the tax rates, the very critical question is, what is the taxable basis? And here I think that what one needs to know and keep in mind are three things. First of all, the taxable basis is not always the same with respect to the various real estate taxes. The second one is the notion of objective value, zone value, or main tax basis. What is the objective value? Objective value, or αντικειμενική αξία in Greek. Objective value is supposed to compute the market value. It is determined on the basis of specific factors, such as the zone value, the age coefficient, the surface of the property, the floor, the age depending on the building permit, the commerciality in case of plots, or the proximity to the sea in case of agricultural lands. All these factors aim to end up with a value which is the taxable basis for a number of taxes. For the purpose of our example, we refer to two properties, one in the center of Athens at Kolonaki and one in the south of Greece at Peloponnesos. And just as an assumption and for the sake of the example, in the first case, the price per square meter is lower than the price per square meter in terms of objective value, whereas in the other case, the opposite happens. What you would see from the example is that in terms of real estate transfer tax, the tax is always imposed on the higher, be it the objective value or the purchase price. Whereas in case of Eftihia, supplementary tax and SRED, the taxable basis is the objective value. Especially when it comes to the main Eftihia, we have one value, one tax, which is computed as €1 per square meter. And such euro is determined again based on brackets and based on the zone values. Let's move to compliance. In terms of steps, prior to purchase a real estate, one would need to obtain a tax ID. He or she would need to file a real estate transfer tax return and pay the tax, to report the property in the E9 form, which is on the basis of which the annual Eftihia is assessed, and subsequently to file property income or corporate income tax returns. And let's go to the second section of the presentation. I will refer to certain structures that are the most commonly used for holding real estate properties, serving business or personal needs of the investors. For the purpose of the examples, we are referring to a US tax resident who is a Greek national or could be a Greek and US national, and he or she holds the property through various structures. Again, my references would be from the Greek taxation, from the country, from the jurisdiction of the investment. The first example has to do with a pleasure property, a property held for private use. In our view, the most straightforward holding structure for these types of investments is to hold it directly by the private individual. In terms of the life cycle of the property, one would expect to pay real estate transfer tax or VAT, which is currently under suspension. Depending on whether the owner has other assets on income in Greece, he may find himself to need to justify the purchase price for pothen έσχες or deemed income tax purposes. The annual property would be the main Eftihia, which would be the same irrespective of whether the property is held by a private individual or a legal entity. The main Eftihia is the same amount and it does not depend on the owner. And the supplementary Eftihia, which is computed on a different way when the owner is a private individual or a legal entity. For private individuals, the supplementary Eftihia takes into account the total value of the assets of a private individual and it's computed on taxable brackets on the basis of progressive tax rates with an exempt amount and the higher tax rate being 1.15%. There would be no income tax for self-use of secondary homes. In case of exit, currently there is no capital gains tax until 2022, but it is our impression that this may be further extended because actually this exemption has not been applied for more than 6 years. In terms of inheritance and gift, a Greek real estate is always a Greek asset, so it would always fall within the Greek inheritance and gift taxation. I would like to refer to the recently introduced gift tax exemption, which is for a value of 8,000 euros. Actually, this has been implemented as of 1st of October, and it has resulted in a number of family transfers for the purpose of making use of these rules. And again, the critical question is that this amount is computed on the tax value. So if you discuss about a real estate, then it would be critical to see whether the objective value of the property is lower or higher than this threshold. And moving on to the passive investments properties, the reference would be to corporate structures. We will present 3 different structures, starting with a property held by a Greek corporation, a Greek Société Anonyme Orike. We would go through a similar structure whereby, however, the owner is a US LLC. And the third one would be a 2-tier structure consisting of both a Greek company and a US company. In terms of the Greek company, one would expect, again, real estate transfer tax or VAT. The corporate income tax rate currently in Greece is 22%, and the taxable basis would be the profits. While upon the distributions by the Greek company, a 5% dividend withholding tax would be due. The Greek-US double tax treaty does not eliminate this tax. In terms of annual property taxes, the main Eftihia will be due. The supplementary Eftihia for corporate entities and in case of passive income investments is computed at 0.55% on the objective value. And SHRED may apply if no exemption applies. This is a different matter that will give some insight at the end of the presentation. Now, upon exit, in case of an asset deal, the gains would be subject to corporate income tax at the standard corporate income tax rate. And again, the 5% dividend withholding tax would be due. If exit is as a share deal, in such case, no tax would be due in Greece. Again, in terms of inheritance and gift tax, the shares in a Greek company constitute Greek assets, and therefore they would always be subject to Greek inheritance and gift taxes. Let's go now to the US LLC. The US LLC would be taxed on income from a movable property in Greece on the basis of Article 6 of the Greek-US double tax treaty. So irrespective of whether it would set up a corporate branch or not, the income from the real estate would be taxed in Greece at the standard corporate income tax rate. There would be no dividend withholding upon remittance of profits because this actually would be profits remitted within the same entity. And in terms of inheritance and gift tax, the shares in a US LLC do not constitute Greek assets. So under requirements, they can be exempt from Greek inheritance and gift tax. And relevant requirements have to do with whether the donor or the person passing away has been a foreign tax resident for more than 10 years outside Greece. Let's go to the two-tier structure. And I would think that this is the most commonly used structures that we see in our everyday, business life. Usually, the Greek property is held by a Greek SPV, and this is because it renders any future sale easier and more preferable. It is usually, and the reason for that is that any third-party investor is more likely to acquire the shares of a Greek company when it comes to a Greek asset. The Greek company is usually held by a US or an EU holdco, and the investor sits on the top of the structure. Again, the profits distributed by the Greek company would be subject to the 5% withholding tax. And in case of exit, be it at the level of the Greek company or at the level of the US company, there would be no tax in Greece. Again, if the asset to be inherited or be gifted would be still shares in a US company and therefore not within the scope of the Greek, exempt from Greek tax under requirements, as we said before. And a very interesting topic is the rules for property-rich companies, and this is very relevant to the exemption of capital gains upon transfer of shares of entities holding interest in Greek real estate. What is a property-rich company and what is a property-rich clause? A property-rich company is a company that derives more than 50% of its value from Greek real estate. Greece, as is also the trend in all European countries and globally, has considered that when a company derives more than 50% of its value from real estate, such gain should be taxable in Greece. Nevertheless, although this clause has been introduced in the income tax code back in 2014, it has been under suspension since 2015. So in practice, it has never been applied, and the suspension would apply until 2022. It remains to be seen whether this extension would be further extended, and based on the government's remarks, the whole framework will be revisited from outset before coming into play. If relevant clause comes into play, then capital gains tax would be taxable at a 15% rate. It is uncertain whether a similar treatment would apply to corporate entities. In our view, this shouldn't be the case. But if it were, then the 22% corporate income tax would apply again. Greece USTTC does not eliminate Greek capital gains tax. It would eliminate, however, corporate income tax in case of legal entities, since this would qualify as business income rather than capital gains. Two more things, two more items that are very critical upon discussing of Greek on matters of relevant to Greek taxes on real estate. The first one is the special real estate tax. This is an anti-avoidance tax, so no one is supposed to pay it. Everyone should proactively review the grounds of exemption and see whether they can qualify or not. When it comes to passive income investments, then the disclosure exemption applies. This would require that the whole structure is disclosed and that the UBO, the ultimate beneficial owner individual, would have a Greek tax ID in Greece. Another element is the VAT. It has been referred also by other speakers that there has been a suspension of VAT on new buildings until 2022. The VAT is a significant element in the sense that the rate is 24% and therefore is a significant cost for those taxpayers that they are not entitled to set it off. So in principle, a business entity carrying vatable activities, including the renting of commercial properties, would be entitled to offset VAT. And here my presentation comes to an end. Thank you very much for the time, and I would be very happy to go and discuss any question or any matter of interest to our audience. Thank you very much.
That was such an informative presentation. And I want to remind our audience that at the end of the forum, we're going to put up in our site all the PowerPoint presentations that were made during the forum. And since I have you still on it's fresh what you just gave us, we've been reading in the press that there has been a recent readjustment of the objective values. We're also reading that the government is expected to further readjust these values. Can you give us an update on this topic and on the implications for property owners?
If I can take the floor again, of course, my co-speakers, peers are more than welcome. This is true. As of May, we have a recent adjustment of the values. The areas that have been impacted are areas within the town planning, so mainly in the cities. There has been also an extension to some areas where the objective values did not apply. For specific areas, 1 out of 10, the increases have been more than 50%. But still, the overall understanding is that the prices are still lower than the market value. The significant difference between market value and objective value still applies in urban areas. So in areas on islands, in areas outside the city planning, you would see that the differences, you may find a market value of 1 million and a statutory value of 50,000 euros. And this is a topic that the government considers. The adjustment of values for urban areas is within the plans. And I think that digitalization would also serve as a tool for the assessment and monitoring of market values based on contracts that are being concluded. Nevertheless, following the May increase, you will find that all the notaries are heavily occupied until the end of the year, because actually the new values would come into force as of January 1st.
Okay, I have a question for Mr. Kormas. When the question is, when all the real estate that has been sold to the funds, foreign funds, domestic funds, when all this real estate hits the market, what would be the impact on the valuations of the real estate properties? Could the market be flooded with supply and see prices drop again?
An excellent question. Allow me first to start with a small remark on the objective values that we just touched upon. Very, very well by Mrs. Allamani. I would like to add on that and connect it to what I said in my first statement. Given the fact that we still have a very shallow market, it was necessary to create this artificial, because we are talking about an artificial value, this αντικειμενική αξία, it is actually an artificial value, and it is the second best guess in order to assume what is really happening during a contract. We all know that unfortunately, not the real transaction prices are always displayed in the contracts signed upon the contracting partners. And this is not obviously something that only happens in Greece, but elsewhere as well. But in the absence of a digitalized bureau that would record all that and give you a good idea of what the real price level is in certain streets, blocks, or cities, this is an approach to come closer to reality. We have experienced huge differences between objective values and real values in both directions, some of them being overvalued or undervalued. Now we are converging towards correctly reflecting the economic reality. I just wanted to have this added to the objective values. Coming back to the funds or similar, yes, indeed, and as I already said, the financial crisis that did begin as a sovereign crisis ended up being a banking crisis at the end as well. And this is because the Greek economy and the Greek banking system up until then had an easy approach towards lending. There were no exotics or similar in the Greek financial market of back then. So only if you had a piece of real estate asset, then you were entitled to put this as a collateral and get a loan, a credit on that. As of that, when things got rough, almost every second loan went red. So we had among the European Union one of the highest, if not the highest, non-performing loan number, almost 50%. All banks, including our group, are now moving in a single-digit number of non-performing loans, with the aim to have it reduced in the lower end of a single digit in the next year, which is a huge exercise, and it really one of the most difficult I have ever experienced. But nevertheless, we are there, and the reason we manage that is through bulk sales of either the servicing of these non-performing loans with the corresponding collaterals underneath them, or by direct sales of pure real estate to them. The question that you gave me before has actually been the main debate in the past as well among banks, because if you consider the 4 systemic banks that are now shaping the landscape of the Greek banking system, were actually the ones who were owning all these loans, collaterals, or real estate up until recently. Moving back and trying to assume the position of the funds that are now possessing this very same bulk of non-performing loans with collaterals or real estate, I can say the following. There is a logic behind avoiding throwing all this real estate in one go in the market. And here we do have, again, the very same problem of the depth of the market. If you try to reroute an entire river into a pipeline that is only 1 inch wide, it is impossible. So everybody knows that. And accordingly, the investment plan of these funds is following. There is another aspect as well, which is the following. In order for these real estate to reach the market, as they are mainly in the form of collaterals to a non-performing loan, they first need to go through a foreclosure process. Lucky us, and this is again a credit to the current government and the improvements that have been made in the institutional framework and the juridical environment as well. This time to sell is expected to be reduced compared to what has happened in the past. All this together do give you, I hope, an overview of what is going to happen. So in the same time, we do have some impediments in creating real estate assets through the foreclosure process. Those are slowly being removed, which is something in the right direction. Obviously, there is still the protection of the weakest members of our society, as with regard to the first housing and so on. And here it would be of an advantage to mention the new bankruptcy law that is yet to be applied, which is a very interesting approach as well. So as I already said, I don't expect huge numbers to reach the market. And if so, we do still have a way to go up until we reach the level of prices that we did have before the sovereign crisis that I mentioned, and which started back in 2008. So there is sufficient buffer there to absorb additional entities, real estate entities on the market.
Okay.
So
we're running out of time. I have so many more questions to ask you. Believe me. Maybe we should do another. Maybe we should do another conference just on that subject. I'm gonna just ask a quick question to Mr. Filiopoulos, and if he can answer me maybe in 1 minute, because we really are over our time. I just want to say that for many years there is a bitter taste left to a lot of investors who came to invest in Greece because of the bureaucratic procedures and everything processes. But we are all aware that there's been a lot of progress for structural reforms, automation of procedures, and several laws that were introduced for transparency and even expediting the process through the bureaucracy. So do you feel confident that Enterprise Greece can help solve all these issues that kept the investors away in the past? In 1 minute, please.
Well, I do believe that, as you very well said, the country has improved tremendously, and the public administration has improved via these reforms, especially the past 2 years. And we see this in the companies that have decided to invest in Greece, multinationals like Pfizer, Cisco, Microsoft, Amazon. Yesterday, it was announced by the Prime Minister. I think that this is a strong indication of the changes that have taken place. And well, if these companies that I just mentioned decided to trust Greece and invest in Greece, I think that this is a great example that of how we can help other investors as well, Greek Americans, American investors of smaller size, not as big as Microsoft or Amazon, to help them invest in Greece in a safe environment and get very good returns on their investments.
And I read a lot of very positive comments in your site from people that you have helped already. I have to say that. So you are now the one-stop shop for investors in Greece. This has been such an amazing panel. We're running out of time, but we're certainly coming out of this panel wiser and most informed about the real estate market in Greece, the tax considerations, and the willingness of the government to provide this one-stop shop to expedite the process. Mr. Kormas, Mr. Filiopoulos, and Ms. Allamani, thanks are not enough.
Thank you.
Thank you. We're going to a very short break, and we're coming back with our last panel that will be moderated by George Pipergias, who all of our speakers have met as he's in Greece and was the coordinator of the event for both the Hellenic-American Chamber and the International Chamber of Commerce.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax, finding creative ways to leverage the technologies that were probably created for other areas of the business. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway.
Atlantic Bank is a historical institution that coincides with the history of the Greek Americans in the United States, and I'm very privileged to serve as president of this organization. I'm a proud Greek by birth and American by choice. I can see and I can feel what a Greek American needs in terms of banking. Through this institution, I'm able to support Greek American organizations in the United States. I try to help clients, I try to help Greek American entrepreneurs. America is the country that gives you opportunities, and you have to grab them when they present to you, because you never know if you will have more opportunities on your way.
Good evening to our audience in Athens. Good afternoon to our audience in New York. My name is George Piperias, and I am the digital event coordinator for ICC Hellas and the Hellenic-American Chamber of Commerce. I will be the moderator today for our fourth and final panel, Educating Expats on Bureaucratic Procedures in Greece. I know that this panel has special interest for many non-residents who have in the past been overwhelmed by the bureaucratic procedures that existed in Greece. As we know, and I can speak firsthand from experience as a Greek American that was born and raised and lived in New York for 28 years, it has been quite frustrating and sometimes, frankly, mind-boggling to get bureaucratic procedures done, especially from a distance. Fortunately, this has changed in recent years. Many processes have been streamlined by the new government, especially by the Ministry of Digital Governance, led by Minister Kyriakos Piraeus. Through the website gov.gr, individuals can now execute many bureaucratic requests or find personalized information, which in the past required in-person visits or, frankly, a great deal of time and effort. In addition, for the more detailed or difficult processes, interested non-residents may also receive help from professionals such as bankers, lawyers, and accountants, based both in Greece and the United States. Today, we have a distinguished panel of such professionals who will discuss such topics as how to obtain the right AFIMI or tax ID number in Greece, as well as getting approvals for special tax regimes, etc. Unfortunately, our third speaker will not be able to join us today, and as such, we will not be able to discuss in detail the issues related to dual citizenship and acceptance of inheritance. I can tell you some basic points, however, on these subjects. Greek law allows dual citizenship either by descent or through naturalization. And as you know, citizenship in Greece means EU citizenship and the rights to free travel within the Eurozone as well. The good news is that the consulate in New York, led by Consulate General Konstantinos Koutras and his team, are hard at work streamlining the process and making it as virtual as possible, thereby minimizing in-person visits, which, as we all know, take time and a lot of effort. This process should be in place by the beginning of 2022. We recommend all those that are interested in dual citizenship or other issues related to it to contact the Greek consulate in New York for further information. Without further delay, I'd like to introduce our panel now. Two amazing women and leaders in their respective fields, Aneza Stavru, Director of the Tax Department at KPMG in Greece, and Nancy Papaioannou, the President of Atlantic Bank in New York. I'd like to give a special thank you to both of you for taking time out from your busy schedules to join us today and shed light on these important subjects. Let's start with Aneza Stavru. Aneza is the Director of the Tax Department at KPMG in Greece and has been working with the company since 2004 as a tax advisor. Aneza's team is responsible for providing personal tax services to individuals seconded to Greece and has many years of experience in the field. Aneza and her team provide a wide spectrum of tax advisory and compliance services. She will present to us issues related to tax registration, AFIMI, or tax ID number, annual tax return requirements, amendment of tax residence, and special tax regimes. Aneza, thank you for joining us. The floor is yours.
Hello, everyone. Good evening. Good evening from beautiful Greece, Filiopoulos specifically to everyone. I'm just sharing my presentation very quick. Let me just get away. Can you see my presentation, everyone? Yeah? So is it okay? So I would like to thank you very much, Hellenic-American Chamber of Commerce and ICC Hellas for this invitation. That's a great honor. Coming here from Greece, when I was getting ready for the presentation today, I couldn't stop of thinking our tax reimagining. This is this new launching of KPMG business offering in a way that we offer like a technology-enabled approach to developing a target operating model. This is a new way of thinking tax, and this is a new way of doing basically business in a way that we do better reporting and compliance in less time. And that's exactly what I'm thinking when I'm thinking also tax administration over the past couple of years. It has been done so much from a tax perspective of having things done online. That's very well said earlier. But still, there are things to consider when somebody is coming to Greece or when somebody is already in Greece. And I will guide you through today the Greek tax life cycle, the way I like to present it, and that being the tax the tax registration, what to think when you get tax registered in Greece, the annual tax returns, the amendment of tax residency, at the end, the very important and hot topic of the special tax regimes. I will start with the tax registration, and that may sound very easy. Yeah, I'm getting a tax ID, how difficult that can be. Yeah, you'll be surprised over the last 17 years of my work experience that this topic comes over and over again. Yes, you need to get tax registered. It can be very easy, especially given the last introduction of the IVE Live. You can book online and get your tax ID ready, but make sure you get registered properly. And when we say properly, I mean you get registered either as a Greek tax resident, if that's your intention to come and live in Greece, or as a non-resident. Make sure that if you want to be remaining in the US, live in the US, but just want to get a tax ID in Greece just for other purposes, like for buying a property in Greece, you get registered as a non-resident. The mere fact that you may have like a Greek police ID because you're a Greek citizen does not necessarily make you a Greek tax resident. Just be very aware of that. Something else, when you get tax resident, is always good. You get yourself also electronic codes, which are needed, and also familiarize yourself with the gov.gr when you do many things online and you don't need to certify certain documents. At the end, when we say obtain Greek presence in Greece, that comes back to what was discussed earlier. When you're saying you want to come to Greece and live in Greece, people ask, why do I need a Greek mobile? Why do I need a Greek bank account? I mean, those are some technicality you may say, but they substantiate your presence in Greece. So it's good when you come to Greece that you show that you also have like a mobile phone or a telephone number or like bank account in Greece. May seem as a formality, but at the same time, substantiate your presence here in Greece. And we continue on the annual tax return filing. Over the last couple of years, again, I will start, of course, with filing as a resident or as a non-resident, because filing as a resident, you're obliged to report your worldwide income, where filing as a non-resident, you're required to report only your Greek source income. Again, when the time comes to file your tax return, take a time and see, have I been registered on the right way? It's better you file a bit later if you see that you're not properly registered, delay your filing, change your status properly, and then file on time, rather than filing nil returns registered as a Greek tax resident. Over the couple of years, just keep in mind that the Greek tax administration is requesting that you complete your country of residence and your tax ID on the country of residence. Many people don't really like that. They don't like to disclose such information, but it's of pivotal importance for the Greek administration to keep track of where you are. So when many years down the road, because now we see that happening very, very often with special regimes, when many years down the road, they want to see in which country you've been tax resident over the 5 past years, it's easy for them to track that down. It's also requested, of course, for the exchange of information between the countries. So that's something that cannot be avoided. Make sure you properly state your correct tax ID and your proper tax residence. Something else you need to consider from an administrative, bureaucratic side of things is that if you file a tax return as a Greek tax resident, let's say you are on the foreign pension regime and you need to declare your worldwide income. If you declare foreign tax credit, your tax return will be subject to audit, meaning that you need to show to the Greek authorities, where did you pay that foreign tax? And that's not that easy as it might be in the US, where you just upload possibly your Greek assessment note. In Greece, we need certain documentation issued by foreign authorities, apostilled, stamped, signed, and all this. So it's better you have a good tax advisor. If your tax return need to claim foreign tax credit, make sure you have the proper documentation so you don't lose that. We're moving on to the amendment of tax residence. That's a very, very hot topic, especially in view of the special tax regimes. Amendment of tax residency means that if you are a Greek tax resident and you want to become a non-resident, it's the time when you leave the country. That's an exit formality. So when you leave the country, you need to go to the tax office and say, listen, I'm leaving permanently Greece and I need to change my status from Greek resident to non-resident. That's a very long process and it's time consuming, but if it's done right, it can be finalized within the deadlines. Just be aware that's an exit formality, which is very important down the road. And why is it important? Because at the time you may want to repatriate back to Greece, if that has not happened properly, then you may need to face this procedure at that time. It is possible, so I highly recommend you guys go and check your tax registration in Greece. If you have left Greece for whatever reason, or when you got your tax IDs back in ages, because your father got it and you were never in Greece and all that, you go check. And if you haven't been registered correctly, go and do the procedure of retroactive amendment of residency and make sure that you're properly registered in Greece. And that's basically what you need to know about your correct residency status. So it's one process being registered correctly. And if you're not properly registered correctly, then you go to this amendment of residency status process where you can fix what wrongdoing was done in the beginning. And at the end, we're talking about the special tax regimes. And I'm not going to go through the requirements because that was already discussed by Ms. Georgia Stamateou earlier today. It was very detailed. What I'm going to draw your attention on is on a few points we've seen from our business experience that have come up, and that has to do with the residency abroad. What I'm trying to say here, and that was discussed also before, that before you come to Greece and when you come to Greece, make sure you meet the requirements of residence in Greece, and you don't allow any other country to possibly jeopardize your residence in Greece. It's very important that no other country claims your residency, because if that happens, then your special tax regime in Greece may be jeopardized. Also, for certain regimes, in order to file the application, you need to make sure that that foreign country meets the OECD cooperation requirements. So although it's a process that's done internally by the ministry, by the tax office, we always recommend that you check before you file if you come from the right country that would be acceptable by Greek authorities. Apart from that, you always keep in mind that certain documentation needs to be in place. And what we've seen from the process is the foreign pension regime that is the most difficult of all, because there's so many different foreign pensions around the globe, and the structuring is so different, and the documentation is so different, where people get frustrated, the tax office gets frustrated of what to present and what to be accepted. So please take a special due diligence and be prepared in advance on the proper documentation, have it through the tax office, get their mind of it, get their idea of how do they look, what do they want, instead of just filing it a straight application and wait for the approval or rejection. And closing, something else always to remember is, apart from the fact of filing the application and meeting the requirements, you've done everything, some regimes require annual maintenance of paperwork. So it's not just to file the application, approved, done, perfect, leaving, forget everything. No, it's not exactly like that. So we highly recommend that you keep an eye on the annual maintenance and what's needed every year. And that's why we again recommend you have a good advisor, especially during the couple of first years that you are on the regime, so that proper administration and housekeeping is kept. And that's what I would like to share with you today. And basically keep a good due diligence and make sure you're properly having your tax affairs in Greece. You're properly registered, and if not, do that immediately. Thank you very much.
Thank you very much. It was a very informative presentation. I think we could spend a lot more time on this, but unfortunately, we've run over, and in general, we're running out of time. If we have a little time at the end of the panel, I want to follow up with another question. Second speaker will be Nancy Papaioannou, the president of Atlantic Bank in New York since July of 2013. Under Nancy's presidency, Atlantic Bank has become the biggest Greek-American banking institution in the U.S., serving the Greek and Cypriot American community locally and internationally. Nancy will discuss with us how Atlantic Bank can help with people moving and changing their tax status to Greece. Nancy, thank you for joining us. The floor is yours.
Thank you very much. Let me be also the one to recognize our own Eftihia Piper to be instrumental on behalf of the Hellenic-American Chamber of Commerce putting together this forum, and also Mr. Doukas from the ICC. And we hope we'll see many, many more as questions remain unanswered due to the time restraints. Anyway, my banking experience derives from Greece at National Bank of Greece and from the United States at Atlantic Bank. I would like to point that after more than a decade of economic hardship, Greek government plans have a lifetime excellent opportunity for Greece to create sustainable growth and transition to a prime business and investment destination. Of course, this needs banks and banks to transfer money from one country to the other, as we saw last in 2021 with tourism, technology investment, and now all the Greek Americans that travel to Greece for summer and pay tickets to foreign airlines. By saying this, Greece is from the few countries that used to have a Greek bank in the United States, and right now we don't have. So someone can think the income, the lost opportunity in income by but in Greece not having a Greek bank in the United States. And also an airline that can help all these Greek Americans primarily traveling to Greece with direct flights. Right now, only Emirates can give us this opportunity. I know I have to speak about banking and, I throw all these things, but there are good opportunities for investments of the Greek government to think of. So going back to what Mr. Holidis mentioned about W-9 forms, yes, W-9 forms are United States tax forms that US residents or nationals should complete when they open an account in any of the Greek financial institutions. Same thing, when Greeks come to the United States to open an account or a company, they must complete a W-8 form that requires all the Greek information, address, and AFIMI, which is the equivalent of Social Security or tax ID number in Greece. In addition, recently, the international tax laws between the United States and Greece, which involve a number of common issues that typically involve income tax, dividends, estate, have been enacted and agreed. New agreements and updated agreements have been signed. One of the agreements that is in full effect right now, it's called FATCA,
by definition, foreign act tax compliance agreement, which is required the Greek institution, Greek financial institutions to report any interest, income, or accounts of US persons having accounts in Greece. Same thing, United States institutions, when we have foreign persons, we are required to report interest income to countries that are part of this FATCA agreement, and Greece is one of them. Moving forward, what if a Greek American decides to move to Greece permanently, and what he needs to do to collect perhaps pension or any other derives from United States? Well, if they have accounts with a US bank, for example, Atlantic Bank, they can continue maintaining the account in the United States, and they can have a Visa debit card or MasterCard debit card that can use in Greece and in any other countries that will be residing. Also, they can have fixed instructions that either, for the pension that they receive or the rental income that they receive. And for instance, Atlantic Bank can wire every month or every 6 months or every 3 months the proceeds to their bank account in Greece of their selection. A lot of times, as a bank dealing primarily with Greek Americans and Greeks residing in Greece, we deal with legal documents. In these legal documents, because of the difference on terminology in legal matters like form of corporations in the United States and form of corporations in Greece, the word of beneficiary in the bank account, and there is no beneficiary meaning in the Greek institutions, in the Greek banks, because perhaps it's not has been addressed, but right now that does not exist. Also, in wills, in estates, in trust, in the United States, the legislation has been tremendous in establishing fair acceptance in these kind of cases. In Greece, there is no trust. In the United States, a lot of Greek Americans establishing trust to manage their wealth and be managed for the kids for various causes. Greece, as moving forward, they need to address these things, not only because it's a legitimate way of dealing between Greece and United States, but also it's a good way of addressing the needs of Greek Americans moving to reside to Greece permanently. In terms of Greek entrepreneurs would like to expand their business to the United States. Atlantic Bank through the years had helped a lot of companies, a lot of businesses establishing their existence in the United States. And again, as Greek company, the income ends in Greece. So Atlantic Bank always tried to help in establishing these ways of helping Greece, and also with the help of the Hellenic-American Chamber of Commerce, we have the network of lawyers, of accountants that we were able to help these Greek entrepreneurs expanding in the United States.
Thank you very much. Thank you very much. I'm sorry to cut you off, but we have to. I want to try and squeeze in one question for each of you. Let's start with you since you're already on now. I know that the Atlantic Bank in the past had a cooperation with Ethniki Trapeza in Greece, the National Bank of Greece. Is there any way that a Greek American that wants to open a bank account in Greece from the States, though, not being actually physically present in Greece, is there any way that Atlantic Bank can help in that process, or maybe make an introduction to maybe somehow smooth the process?
When Atlantic Bank was owned by National Bank of Greece, the world was completely different in Greece and in the United States. Although I remember that we were able to open account from here for Greece, and also to give loans or letters of credit, everything to facilitate National Bank of Greece and vice versa. Unfortunately, right now, we can only help people, give them contact persons from in Greece, in various banks, to help the process. But other than cooperation with the National Bank of Greece, we don't have any affiliation or any other relationship right now to further help and embrace any transaction.
Okay, thank you very much. Aneza, one last question for you. From your experience, from your business experience and day-to-day interaction with the Greek tax authorities, what would you say is the most bureaucratic procedure that you've experienced when it comes to personal taxes? And have you seen this bureaucratic procedure improve in the past 2 years under the new government?
Yeah, that's a very good question. I will try to refrain myself by saying that there are many. I've seen big progress, definitely, of the bureaucratic procedures, or from getting a tax ID and filing a tax return. I will refrain myself for answering what it is, what process it is, and I will say that if you have a good housekeeping and a good due diligence of where you stand with the Greek tax authorities and a good tax advisor, things can get smoother. The system is there, the tools are there to help you. You just need to pay attention on a yearly compliance. That's all it takes, basically. Just be aware of the situation, yeah?
Okay, great. Thank you very much, both of you, for your input and the very, very informative panel that we had. I'd like to pass the baton to Eftihia Pylarinou-Piper for the closing remarks of the panel. Thank you very much from me. We can't hear you.
It has been such an extraordinary forum. We learned so much from our distinguished speakers on so many subjects. To summarize, we learned about taxation as it relates to non-residents who want to work and live in Greece and move their tax residence there. We learned of what they need to do to have their application approved under the special regimes. We learned about the opportunities and the challenges in the real estate investment and how to get around a labyrinth of procedures for transfer of properties and assets with the least tax payments and no waste of time. We met accountants and lawyers and 2 distinguished bankers in our panels that you can seek their advice further and get the rest of your personal questions answered. As I mentioned earlier, the CVs of all our speakers and contact information will remain available at the Hellenic-American Chamber's site, which is Hellenic-American.cc. The whole forum will also be uploaded to the site and will be available to watch what you missed at your own and watched at your own time. I have to say that I felt very proud when I realized that our forum had such a high number of speakers who were women, exceeding the number of men, especially when they were not picked based on their gender, but as the top experts of their field. I'd like to see many more panels like that. So on behalf of both the Chamber of Hellenic-American Chamber of Commerce and the International Chamber of Commerce, I want to thank all the speakers and moderators for making time in their busy schedule to offer their service, to offer their advice, and share their expertise with us. We're grateful. It has been a great honor for me to chair this event and a great pleasure to work with Alexandra Spiritsakis, the executive director of the Hellenic-American Chamber, and the members of our committee, Nancy Papaioannou, Antoni Kondomichalos, and our coordinator, George Piperias. Special thanks to the presidents of the chambers, Mr. Athas, Ioannou, and Petros Doukas, for their personal contribution for the success of this forum. We owe gratitude to our sponsors who have supported our efforts to bring this event to you. KPMG, Atlantic Bank, Red Apple Group, MacArthur Capital, Constantine DB, Mr. Clay Maylan, and Aymar, we thank you again. We appreciate the support of the Greek American media outlets and thank them for communicating this event. I'd like to mention the National Herald, Cosmos FM, Hellas FM, Greek News, Anamnesis, Hellas Journal, the Greek Reporter, and all the consulates in the United States who have shared this event, and some of them that were streaming it live. We will continue with many more such informative events. There's great interest from our members and friends. And what's better proof to that, when the number of registrations for this forum reached over 700, very big number. And now the closing message from the president of the Hellenic-American Chamber, Athas Ioannou, followed by the president of the International Chamber of Commerce, Hellas, and mayor of Sparta, Mr. Petros Doukas. From me, Charoumenes Yortes, and happy holidays. Thank you.
Thank you very much, Eftihia. I don't think I can say, I think Eftihia summed it up very nicely. I would just like to reiterate what I said at the beginning of the forum, which is that we're very happy and proud to present such wonderful and useful information for our community. I think if you stuck through the whole forum, the breadth of what we are trying to, what we covered is pretty, it's very expansive, and it's information that you can immediately put to your to your benefit. It's information that's valuable and that is from top professionals. So it's a real service we're providing, and we're very happy to do that. And I hope that you've taken things away that that you can immediately put to use, or information where you can immediately find resources to further your objectives. So with that being said, I'd like to thank you all again, and welcome again, Mr. Doukas, to close the program.
Dearest Athas and dearest Eftihia, dear friends in New York, in Greece, and around the globe, it was an amazing forum. Excellent presentations, excellent speakers, and excellent organization, Eftihia. Things moved very, very smoothly and very timely. We have to congratulate, I think, the Greek government for understanding the market needs, for understanding the non-resident needs, and making Greece today much, much, much more competitive in terms of attracting non-resident than it was ever before in its history. So I think we can start packing our suitcases and seeing very, very seriously how to take advantage of these laws that are in favor of non-residents. We want to keep you busy, so we're already thinking about doing something about investing in the Greek capital markets, equity and bonds, and the Athens Stock Exchange, and for corporate taxation, how it has also become much more attractive. So in partnership with the American Hellenic Chamber, Eftihia, we could do, I think, very, very interesting things for all the people that are interested in these matters. So again, Eftihia, really congratulations to all the American Hellenic Chamber of Commerce team and our guys at the International Chamber of Commerce in Athens. And I'm looking forward to many, many more forums and fora like this. Very, very useful. Thank you very much, and have a Merry Christmas and Happy Holidays to all.